Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have some movers and shakers this morning. Delta Airlines surging on earnings. We are also seeing ConAgra fall sharply on a earnings miss. So a couple earnings starting to trickle in. Next week, we have the financial firms reporting and then technology starts. So we're just about to get some big action here. Now, the big story from yesterday was Nvidia crossing the $4 trillion market cap level. It also hit the major trend line of resistance, the parallel that I gave you in yesterday's game plan, and it actually turned out to be a fantastic shortable level for an intraday trade. We'll go over that today as well. But first, let's kick off with what the markets are doing today. We can see again, overnight, the futures were kind of floating lower, and then sure enough, just like yesterday, come 3 o'clock in the morning, European markets about ready to open there. We can see that we started to incline, then a small pullback. But again, overall, from yesterday's close, we are trading flat to negative on the ES or the S&P futures. All right. So again, overnight downside, we've come back sizably. We're almost flat on the day. But again, notice when the rally began. And what we can see here is if we go back to pre-yesterday, look right here. See the rally starting in this same time frame. What that tells us again is there are buyers that are coming out of the woodwork at that specific time, usually an overseas buyer, and coming in and buying the U.S. equities. It could also be institutional money that's trying to drive the markets up into the open so that they can unload. And yesterday we saw this fantastic pop at the open, and then look at all this selling pressure that came in. And again, that's always makes me suspect because I look at the market and say, hey, did the institutions push it up on light volume into the open? The retail buyer comes in here at the open, rallies the market up, and then the institutions dump on it. So let's watch that today. Watch the open. Let's see if we see some initial pop as retail FOMO's in. And then do we see some distribution or selling coming in after that? All right, going to the S&P daily chart here, let's flip over. We can see that we have our trifecta of trend lines merging together. That level is still intact. Even if we push up here, these three trend lines are going to still react and be a tough battle for the S&P. Now, if you want to see this S&P really get supercharged, then we need to get above those three levels. But again, until we get above these three trend lines, you have to respect that as a technical trader. All right. So again, we'll keep an eye on that. If we go over to the NASDAQ, and again, we know the NASDAQ obviously is doing very, very well. The NASDAQ is nearing this key trend line here, which is just around 20,900, which is this bigger parallel. So again, we look at the COVID low to the bear market low. And essentially when I drew this, all I did was take a parallel, which is what you can select on TradingView, and you put in those two major pivot lows, you extend it up, and you say, holy cow, look at this. We take it up to the bull market high of 2021, and it matches the exact high on the NASDAQ in 2024. That was just before the 20-plus correction, 20% correction in the NASDAQ. We've now rallied up. And the idea here is if we push up into this level around 20,900, that would be another epic resistance where you could see every time we hit this line, big down move. Here, big down move. And then the idea is that charts tend to repeat because human behavior doesn't necessarily change over time, and therefore you would expect another bigger correction there. So a few levels that I'm watching. Again, both of these S&P and the NASDAQ give the possibility of a little bit more upside in the respective markets, but just levels that I'm monitoring here as a technical trader. All right, dollar, the U.S. dollar today is flatlining, not much movement over the last couple days. It has stalled right at this trend line. If I zoom out, you can see where this trend line comes from. Major pivot high in 2020, the low pivot here in 2023, and then more recently, April of 2025, and then again in June 2025 before we broke lower. Then we've retraced to that same trend line here in July. So this is a big test for the US dollar. If it can get above here, you actually could see a bigger rally back to about the 103 level. But again, it has to get through that level for that to happen. The 10-year yield, you can see here, guys, we had that nice move up the last few days. Then yesterday, the yields pulled back. Today, on jobless claims, we're seeing a little bit of an uptick on the 10-year yield. Now, let's talk about the jobless claims, guys. So for a few weeks, jobless claims, which are people filing for unemployment on a weekly basis, it had spiked to almost 250,000. Now, historically, 250,000 is still not a recession, right? Even if it were to maintain that, it's not a recession. You have to get over 300,000. But the idea is we were looking to see, do you have a trend change where you go from 220,000 on average to moving now to 250, then to 260, then to 270, etc. Well, today we saw jobless claims back down to the 227,000 range. Now, a lot of people would say, oh man, it's going right back down. I would put a star or an asterisk next to this number, and I'm going to tell you why. What was last week? Okay, so think about it logically. Last week was the lead up into the July 4th holiday. The stock market closed half day on Thursday and was closed on Friday. So even though this level, the amount of people filing for jobless claims or unemployment benefits fell, I would say there's probably people that said, you know what, I'll wait to file till after the holiday, meaning that a lot of people were probably on vacation with their families. And they said, all right, I'll wait till this week, essentially this week now, to go file. So let's watch next week when they report it on Thursday to see if this current week sees a jump back towards 240 to 250. And again, you won't hear this in the media necessarily, but I want you guys to understand. Right now, I'm looking at the media out there, and the mainstream media is mostly saying, hey, no big deal here. Jobless claims back down. Everything is hunky-dory in the economy, in the labor market. But again, you have to think about what week is getting reported and what, again, was going on that week. All right, back to the charts we go. Let's go right back into it. Again, the 10-year yield, we see this kind of consolidating here. Now, we do have a 30-year bond auction today. Yesterday was the 10-year bond auction. It actually went okay. It wasn't fantastic. It wasn't horrible, but it went solidly, right? So again, it was basically a non-event. Today, the 30-year, which is even longer duration of U.S. debt, U.S. Treasuries, that's going to be very interesting. That'll be reported at 1 p.m. Eastern time. We also have a couple Fed officials that will be reporting or giving speeches later after that as well. Here's Nvidia, guys. Nvidia right now is trading above 164. Basically, 164 is your 4 trillion marker on market cap. Yesterday, I gave you guys this parallel. I said, guys, watch this. This is going to be a huge level here. You can see big fall here, big or medium fall, then a bigger fall off that level again. And here we are vertically up into it right here. And you can see yesterday, look at that little tail right there. It went right there and then pulled back. And that's why we caught it in the live day trading room as a good shortable level there. It was a great little trade setup. And again, a good one. Now today, let's see, does it close above? If it closes above, it's not a breakout, remember. We need to see confirmation. So I'll be watching to see, do we get a close above? And then if we do we get a confirming candle the next day? I'll keep you guys updated. But right now, this is a level that as a technical trader, I'm focusing in very closely on this one here, this level right here around 164-ish, give or take. Delta Airlines reporting earnings. This was one that I talked about literally on Monday in the game plan. I said, guys, look at the daily chart. This is a bull flag or cup and handle pattern. The sentiment for airlines is very low. I said this likely rallies on earnings. And you can go back. Remember, all these videos are on YouTube, so you can always go back and check. But if we go back to the chart here, look at this stock ripping higher on earnings after closing yesterday around $50.65, traded as high as 58 bucks. Small fade, great move up. Taking a look at the daily chart, this was that pattern that I showed you guys on Monday, your cup and handle, or even a kind of a lopsided inverse head and shoulders right here. Either way, this pattern, this parallel, again, setting up in a bullish parallel for a breakout on earnings, and sure enough, it's trading up here. Now, as a technician, what level am I looking to potentially day trade this? I'm going to give it to you right now. So there's a lot of resistance between 59 and 58.50. So again, 59 and 58.50. Why is it that level? Why that level? Am I choosing it? Number one, you can see these pivots over here. So see those two lows. and then see the gap right here. There's a big gap. You closed here, you opened here. So this, if we get up to this level, this would be a gap fill. So you have a technical kind of pivot low right here, a double tap before it went higher, before breaking down. That now becomes resistance. It was support here. This is now retracing into resistance and the gap fill. So those two factors would be a resistance. And then you also have the even number of $60, just $1 higher. So again, this isn't a swing trade for me. Only a day trade potentially. I will be analyzing it in the Apex Live day trading room with members. And if the trade looks good at the time when the market's open or when it hits, I'll be looking to take it. Here's Conagra, which missed earnings this morning. And by the way, how nice is it to have some earnings coming back? Again, it's only going to get crazier next week with financials and then technology. But I love earnings season because it creates volatility. And volatility for us traders is the essence of our careers. All right, so here we have Conagra down on earnings nicely, but I got to show you this pattern here, guys. This is pretty remarkable. Very rarely do you find trend lines that go back 45 years. Take a look at this. Here's a trend line here connecting through 1980. Check that. It's 1982 or so, maybe back to 1980, which is basically when I was born in 1980. Amazing stuff there. But then you see that trend line there. And then look, you take this high from 1997 and connect it through these lows, and look what you get. And this is what honestly, this is what freaking makes me so excited about charts. It's like I love. It's almost like hunting for diamonds, right? Or gems. Like you're digging around and you're mining, and all of a sudden you're like, holy crap, I found this amazing, emerald or diamond or whatever it may be. That's what charting is for me. What this tells me. All right, this, by the way, it doesn't guarantee it, but it basically gives me a very amazing level to look at. And this would be, for me, a swing trade. This isn't just a day trade. This is a swing trade level. When you have two trend lines, one going back to almost 45 years, the other one going back, and one's descending and one's ascending, and they merge, and price is literally trying to come right into that level. By the way, the level is a Pierce of 17 or right around 17. That, my friends, is pretty darn cool. Like, that is very, very cool. So Conagra, it's not a sexy technology stock. It's not AI. It's packaged foods. But you know what? At the right level, it can be very, very lucrative for us that are looking for chart setups. Very cool. Another amazing chart here that I think has topped out is GE Vernova. And I'm going to show you why. Drew may have gone over this in Trading the Close yesterday, but it's so cool. I found it yesterday. I showed him. He said it was pretty darn cool too. So you have this first bull run in GE, right? It's the lowest pivot here, GEV, by the way, not GE. Lowest pivot right here. So you can see, you go back all the way over here. This is really where this first bull run started, right? All the way up here before this big correction, okay? And then you get the second bull run from this straight up with no major corrections, right? Very clear. This was pretty much a straight move up. So what I did was I said, you know what? I'm just curious, like, what's the distance between this high, this low, and this high, and then this low and this high? And lo and behold, look at this. All right, let's do it right there. So you basically have this distance, and the beautiful thing about this charting is you can use this and you just drag this, right? You can drag it over. So this low to this high and drag it over here. It's exactly this low of this bull move to the current high. Now, what does that tell me? It doesn't tell me by any stretch that this is 100% going to be a top, but it tells me that there's a high probability that it's going to be a top, right? So probably 75, 80%. Now, again, if I can find some other factors, maybe that ratchets it's up a little bit more. But either way, very cool stuff there. All right, other charts to go over, guys. As again, I always try to bring some great alpha to these game plans. Here's your Tesla chart. I gave you guys this wedge pattern recently. I said, guys, if it gets below this wedge pattern and consolidates, then watch out below. That's exactly what's happened. It's gapped below. Notice how, look at this. So here, it started it hit and pierced, held, hit and bounced up, hit and bounced up, then gapped below. That's called a river theory, if you know my methodology, by the way. And then basically what you had happen is, look, it retested the trend line, got rejected. This is now starting to form a bear flag. So again, it's interesting because I read that Tesla in the last month was the #1 buy by retail investors. And that's just a little concerning here because the chart itself is telling me that Tesla is going to go lower. And now, listen, if it reattaches and gets back above this trend line, then it's a different story. But as long as it's below this trend line, there is a higher probability of downside on Tesla. Again, starting to bear flag, immature bear flag, but nonetheless, bear flagging below. Lastly, on the stock-wise chart here, take a look. Apple, again, down a little bit. There's been chatter about, institutional money saying, hey, Tim Cook needs to resign. Overall, I couldn't care less about that. I look at the chart. The chart, again, wedge pattern was a breakout. I noted it here. We went over it. Great rally. For me, you just stay on the sidelines at this point, see if it retraces to the scene of the crime. Maybe this negativity will get it to retrace. As long as it holds this line, buy the retrace to the scene of the crime. If it breaks, you stop out, right? If it confirms below, stop out. But right here, a breakout, retrace, boom, to the upside, maybe to an upside move here. So there's no trade right now on Apple. But if it kind of pulls back, creates that bullish pullback from the breakout, that's a buying opportunity until proven otherwise. Here's a great chart of Bitcoin. Yesterday in the game plan, I said, guys, this is a bullish consolidation pattern. This gives probability to an upside move to the 112 level. Literally after yesterday's game plan in the afternoon, so it was many hours later, we got a pop. Where did it go? Right to the target. That's TA, technical analysis 101 right there. Again, green bar moves sharp, big wide range bar up. That's your flagpole. Choppy action weakening the trend line here in a bull flag formation. Boom. Now, if it does that again, it could be setting up for a break to the 115 level, which again, as I showed you, that's the big testing level here. If we zoom out here, that's the level that I'm really following, right? So again, this is the one that's the major one. Again, listen, and it's not, I'm not, crowning it a major trend. It like literally is. Anytime you have a trend line that price has respected now for 8 years, you got to respect it. Now, listen, doesn't mean it can't be broken. It can be, but until it's broken, I got to respect it. And so there it is, guys. Again, if we consolidate here and have another move up, watch the 115 level on Bitcoin. Gold. Let's take a look at gold here. Flipping back to our daily chart. Gold closed below, didn't confirm yesterday, and still hasn't confirmed today. So again, yes, there's a potential for a breakdown here, but it's still doing its best to hang on for dear life to this trend line. We'll watch and see. If it really confirms, then I think it goes down to this level here at 3,070. Silver. Silver, I've continued to be bullish on. It continues to look solid, trying to break above here. You can see it got above, didn't confirm, didn't confirm, didn't confirm. Now it's back above here. Let's watch and see. But either way, this is a bullish flag pattern. The pattern should resolve itself with a move up to 39-ish. 39-ish is that upside target. U.S. oil, taking a look here. Oil is respecting the parallel channel, which is the bear flag. Here's your flagpole upside down, inside bar action. Tested 2 days in a row, the high, and now coming in. That's case in point, classic technical analysis there. And then lastly, natural gas here, guys. Nat gas, great breakdown yesterday here. So far, it has not tagged support, getting a small bounce today. But as long as it stays below this line, I got to assume that it's going to head down here at some point in the next few trading days, maybe into early next week. All right, so lots going on here. Again, it's one of those days where really, to be fair, the stock market this week has been quiet, but there's been individual key things. Nvidia, right? I mean, holy cow, what a move up on that. $4 trillion valuation. By the way, not to date myself, but I remember when a $100 billion company was like a huge company back in the early 2000s. Man, I still remember when Apple was the first company to breach that $1 trillion level. And everyone was like, holy cow. Now it's like, it's just $1 trillion. No big deal, right? I think there's over 10 companies now that are $1 trillion or greater. So we'll keep an eye on this, guys. As always, I am here. Remember, all charts, no BS here at Verified Investing. That's what we want to focus on. And the idea is, again, it's probability. Everything I say should be relevant to probability, and therefore gives us either an idea of a good trade setup, one we kind of sit on the sidelines, or one we stay away from, one or the other, right? So, all right, have a great rest of your day. I got to get to my trading room. Thank you guys so much for tuning in. As always, guys, I'll talk to you soon.